Hey, good morning, everybody. I have another thought for you that I wanted to leave you with for today. What are the pros and cons of buying stocks that have gapped down? Right? As a contrarian, you always like to look at things that have sold off significantly. And for those people that look at the charts, later I'll talk about charting and why I discourage charting, but we'll talk about that controversy later. What do you do with the stock that you're interested in? You may have a position already, you may not, but you're looking at a gap down in the price. So obviously the pros are in the pro versus con table. You talk about this being a buying opportunity, right? The stock was trading at 10, it's now trading at 7. You say, okay, it's a 30% off sale, right? That is mathematically true relative to the price it was trading at before. Number two, they talk about in the market, and you'll hear this on TV, what they call oversold, right? So oversold is really a technical concept, and again, we'll do a lot to disparage or dismiss technical analysis. But let's talk very quickly about what that means. There is a psychological element which I do endorse, thinking about the psychology, that people, whatever news came out, whatever caused that stock to trade 30 or 40% lower in a very quick fashion, might have been an overreaction, right? So oversold, people overreacting to news. And maybe it's as simple as they have a mechanical or a mechanistic stop loss, right? In other words, stock goes down 5%, whatever the news is, they're out. Well, then there's a cascade of selling, right? So the pressure from a lot of sellers reacting to the same news and not enough liquidity to buy often creates a situation in which people, as my old mentor would say, ready, fire, aim. In other words, typically you get ready, you aim, you fire. In this case, the news is out, you sell, stock gaps down, other people sell, there's a crescendo, and that creates that pattern. The contrarian strategy, that's another element which we just spoke about in the last video. Why does one sell a stock? Well, they no longer like it. Well, why does one buy a stock that's down a lot? Well, clearly they're embracing the contrarian the contrarian thought. Again, you need to do your fundamental analysis. You need to figure out why the stock sold off. But the pros in order are, yes, it could indeed be a buying opportunity. It's mathematically trading for less than what it did before. Again, with the caveat, we got to figure out if it's worth less than it was before. Number two, there's often selling pressure, right? Everybody sees the same news, they sell, and the buyers aren't there to sop up their shares, in which case it creates what people classify as oversold. And number three, it's always contrarian to buy against people who are selling a lot. And again, the flip side is, as they say, fade the gap up. But that's another story which we'll talk about later. What are the cons? There's an old expression that I heard working on Wall Street as a teenager, and I've heard it many, many times before. Don't catch a falling knife. It's such a colorful, as many Wall Street sayings are, colorful analogy. The imagery of a knife falling off a counter and you going to grab it. Well, that's what the people who say don't buy gaps down stick to. That idea that when a knife is falling, you'd rather let it hit the floor and then pick it up, right? Obviously, that's a con, and oftentimes the market is right, and they've sold something, and it will continue to sell off because, again, the sell-off is consistent with the valuation decline, right? That could be the case. We have to think about it. We have to investigate it. Again, you don't want to be contrarian for contrarian's sake. The second thing is underlying issues. We've just talked about that, right? Your underlying issues in the business itself. Sometimes overnight, a stock trades down 40% because there's been a 40% customer loss. There's been a 40% diminution in earnings. If you think that that's not the case, that's where you start to investigate. But, again, sometimes the market is very right to sell off stocks. The other thing is that you can think about, and the final con is that there are people looking at that as evidence, the fact that the stock is lower, as evidence that there's something wrong. While technical analysis, I think, has a lot of flaws, and we could spend a whole book or 2 or 10 writing about the flaws of technical analysis, people who look at charts that have gaps that are down are often not attracted to it because, again, refer to point 2 or con number 2, they think there's underlying issues that, as many people put it, the stock is telling you something. So these are the considerations here. Number 1, does over time earnings and stock prices, do they mean revert? That often happens, right? So if you've determined that the underlying business is still attractive, right? Like, again, in the scenario where a $10 stock sold to $6, if you're buying still $10 worth of value and people overreacted, well, there is a good probability that over time the market will mean revert, that all will be forgiven and people realize that they overreacted to the news that caused them to gap the stock price down. The other thing is that you can consider, though, is back to that whole many people are technicians out there. It may take some time, even though the fundamentals are right. Sometimes stocks are put into what they call a penalty box. So you need to be patient, right? If a stock sold off 40%, 50%, you are potentially buying a very good bargain. If you've determined that, you do have to wait oftentimes for the market to recognize that you've been right. But that's really what investing is about. Taking a variant perception, executing, and then waiting for the market to catch up with your brilliance. Again, the market is often very right, so beware, but it is a good point of investigation to look at things that have gapped down, and we'll look at some examples over time because the market, just as frequently as the market is right, you can often find the market overreacting up and down. And so a good place for a value investor to start to look is in things that are trading down a lot. Till then, I'll speak with you soon.